Now we are going to discuss the next topic, that is audit working papers. Actually, in the procedure of auditing, the auditor uses a number of documents, papers, notebooks, registers, statements during the course of his audit work. Some of these papers are to be returned to the client, and some of these papers are retained by the auditor himself. All these working papers are most important for the audit work. Mostly these papers and documents are prepared by the auditor and are is his personal property. The papers prepared or obtained by the auditor during the audit assignment, or the documents obtained or prepared by the auditor during the audit assignment, or some nature of confirmation letters which are used by an auditor for the purpose of audit, are included in the term of audit working papers, and they belongs to the auditor. If he thinks so, then some of them he can return to the client, or rest he can take himself. These papers are important at the time of preparing report, at the time of communication the actual position of the business towards the client. During audit, when a segment of books of accounts has been audited, or a group of transactions has been audited, or a part of auditing work has been completed by the auditor, then he have to maintain a difference that which part he has been completed and which part he is still going to do for audit. So for this purpose, or for maintain the difference between the work done and work to be done, the auditor uses some tick marks for work done, or the work to be done in future in audit assignment. So audit tick marks can be understood in this way, that while auditing the books of accounts of a business, generally auditor uses a variety of different type of tick marks, symbols that indicates that a particular work has been done, and these tick marks or symbols are called as audit tick marks. These audit tick marks may be in form of alphabet, designs, numbers, geometric designs, arithmetic symbols, etc. These are very important tick marks which segregate the work that has been done by the auditor and upon which he is still going to work off. So audit tick marks can be explained as the symbols or abbreviated notations used by auditors on their working papers during an audit. There is no prescribed format, there is no standard of any type of audit tick marks, but if we discuss them, generally we find the tick marks of common nature. For example, we can see the types of common audit tick marks used by the auditor. It is not prescribed, but maybe there these type of tick marks. During the audit assignment, using tick marks, auditor have to be very careful. He have to take some precautions in using audit tick marks. What are they? Let me discuss. First, the auditor have to use a special tick for each class of transactions checked, such as posting, casting, carry forward, bank statement, and voucher. If the auditor use special ticks for the different class of transactions, then he can easily find out that what type work he has been done and up to which part he has been done the audit assignment. Second, the system of tick adopted should not be explained to the client's staff. Otherwise, they can use those type of ticks that is marked by the auditor to manipulate the audited books of accounts or unaudited books of accounts. Auditors are always advised to use different colors audit mark to make the difference between various periods of accounting year, accounting duration. Tick should be small in nature. Different ticks should be used by the auditor. He can also use a special or different tick for the figure or for the transactions. And at the time of auditing of figures, auditing of numbers, the auditor is advised to use these type of special ticks that after the audit work, no one can manipulate or modify the figure audited or amount audited or number audited. At the time of audit, it is expected from an auditor that his work should be completed up to a certain point. Otherwise, the chances of mistake will increase. Auditor is also advisable that all important totals, balances, important points, etc. should be noted in the audit notebook so that if any employee of client manipulated the information contained in totals, balance, important, modified, then he can easily identify the modification or manipulation or fraud. Always two clerks together should do vouching, because vouching is a comparison between the transactions contained in books of accounts and the evidence of transactions or bills. In case of continuous audit, the work should be performed upon a certain date, because after the use of audit tick marks, the auditor can easily segregate the portion, the period on which he have done the audit work. Now, in the procedure of auditing or process of auditing, we are going to discuss an important thing, that is voucher and vouching. To understand the vouching, we have to know about the voucher first. So let me discuss the voucher. Voucher is a documentary evidence of a business transaction. When an accountant enter a transactions in the books of accounts, he should also submit the evidence to confirm. Therefore, maintaining voucher help to record each expenses liability with high accuracy. Vouchers are also known as source document because every type of transactions is generated from the vouchers or these source documents. In the examples of vouchers, we can take bill receipts, cash memos, pay in slip, check, invoice, any type of debit or credit note. So, the voucher is a documentary evidence of transaction which is recorded in the books of accounts. In the accounting process, accountant do the entry or record any transactions in the books of accounts on the basis of some supporting documents that is always attached to the voucher. Actually, voucher is the prime facie written evidence of transactions for recording in books of accounts, and voucher is always supported by a supporting documents. Let me discuss about supporting document. Supporting documents may include supplier's invoice, vendor or supplier's name to be paid, details like amount to be paid, the due date, the discount given by supplier to pay the invoice early, company's purchase order, receipt of goods company had received from the supplier, the general ledger accounts to be used for accounting purpose, signatures from company's authorized signatory for all purchase and payment, and payment proof and date when supplier's invoice has been paid. So, when the source document is available, voucher are prepared by the accountant. When the voucher has been prepared, then the transactions explained in the voucher will be recorded in the books of accounts that will audited by the auditor. There are various types of voucher also. In the types of vouchers, we can discuss main two type of voucher: cash voucher, non-cash voucher. Cash voucher have further distribution. First is debit voucher or payment voucher. Second is credit voucher or receipt voucher. In case of non-cash voucher, we find again sub distribution. First is transfer voucher. This is also known as general voucher. Next is supporting voucher. Supporting voucher. Now we discuss in detail these types of vouchers. The first is debit or payment voucher. When the payment issued by the business in cash or by the check, means in cash or by the bank, then these types of voucher are prepaid. They may be of two types: cash payment voucher if cash has been paid, bank payment voucher if the payment has been made by the bank. In the event of payment of expenses, payment of some rent, payment of security charges, operating expenses, payment of printing and stationery, payment made for raw material purchased, payment made for stamp expenses, payment made for stationery item purchased. These are the events when the debit or payment voucher will be prepared. For the preparation of debit or payment voucher, the accountant pass entry like creditor account is debited and cash or bank account is credited. For more understanding, we can take a format as illustration for payment oblique debit voucher. Let's see it. This is the general format of debit oblique payment voucher. Have a look. This is voucher and entry passed for wages paid for the month of December 2018. Date is here, name of firm is here, receiver's signature should be here. If the amount of expenses paid in cash or the amount is exceeding rupees 5,000, then revenue stamp of rupees 1 should be pasted here. This is the space for voucher number, amount in figures, signature of accountant, signature of authorized manager. So this is a type of debit voucher. Head of debit account, that is wages account. Now we discuss next type of voucher, that is credit or receipt voucher. Credit voucher A credit or receipt voucher is used to keep a record of cash or bank receiving. It may be of two types: cash receipt voucher or bank receipt voucher. Cash receipt voucher contains information about cash received in hand, or bank receipt voucher contains information about check received, DD received, or any other bank receipt. When cash sale, customer advance received, interest received, rent received, or refund of tax received event occurred, then these type of voucher are used for accounting purpose. Entry should be passed as cash or bank account should be debited and debtor account should be credited. Let we have a look on a common specimen of credit / receipt voucher. This is the journal format. Entry is passed for cash receipt from Wahi and Company. Had to be credited Wahi and Company. He is debtor. Next type of voucher is journal / transfer voucher. This type of voucher is also called a non-cash voucher. This serves as proof of non-cash transactions. For example, in case of credit sales, cash or bank account is not affected. So, the entry will be passed on journal or transfer voucher as debtor account is debited, sale on a credit account is credited. Next example, if we charge depreciation on fixed assets of the company, then entry will be passed on journal / transfer voucher because there is no involvement of cash or bank. Entry may be there, depreciation account should be debited and fixed assets account should be credited. Let me take a common format of journal voucher. The entry is passed for credit sales, debit head, credit head. Let me take another example for journal voucher. Depreciation charged on building, debit head depreciation, credit head building account. The next one is supporting voucher. Supporting voucher serves as documentary evidence of transaction that happened in the past. For example, one can attach the bill of an expense along with the primary voucher to support the sale. Fuel bills are attached with conveyance vouchers. Every company prepares such accounting vouchers as they are extremely important for a business to track down its income and expenses and ensure compliance with statutory requirement. Supporting voucher actually the supporting document which provide an evidence to the main voucher. Supporting voucher are in the form of bills, invoices, etc. This is a common format of supporting vouchers. Suppose you buy a mobile phone from a shop, then the shop owner will issue a bill or issue a invoice to you, and the invoice or bill issued by the mobile shopkeeper is a supporting voucher, and on this supporting voucher base the accountant can prepare a debit or credit voucher. If mobile is purchased cash, then debit voucher is there. If mobile purchased on credit, then journal voucher is there. And supporting voucher is always falls under the non-cash voucher. So Regarding the voucher, we can say that voucher is a documentary evidence of transactions. It has main two type: cash voucher, non-cash voucher. Under cash voucher, debit or payment voucher, and credit or receipt voucher. Under non-cash voucher, transfer or general voucher, and supporting voucher. In the procedure of auditing, all these vouchers will be audited by the auditor, and the process to audit vouchers by auditor is called as voucher. So let me discuss the new term voucher. This is an important part of auditing process. Actually, vouching is the base pillar of the auditing process. Vouching means the examination of documentary evidence in support of entries to establish the arithmetic accuracy. When the auditor checks the entries with some documents, it is called vouching. Vouching is also known as the acid test of auditing. It tests the truth of the transactions recorded in the books of accounts. It is an act of examining documentary evidence in order to ascertain the accuracy, authenticity of the entries in the books of accounts. Actually, in vouching, auditor or his staff just do the comparison that what type of entry, how much entry are in the books of accounts, and in comparison to entries, how much bills, how much vouchers, or how much documentary evidence are there. So this is only a comparison between the entry or recording of transactions contained in books of accounts to availability of documentary evidence, that is vouchers. According to L.R. Dixon, vouching consists of comparing entries in the books of accounts with documentary evidence in support thereof. So for vouching, we can easily say that when an auditor compare the entries with the available bills, it may be called as vouching. And this is the starting point of auditing process. All the auditing process are started with the term vouching. This is the initial step to go for the auditing work. So as a pillar of the auditing process, vouching has various objectives. On the basis of its objectives, the vouching is very important. So we can conclude objectives as like as importance of vouching. The first is ensuring genuineness of the transactions. Only those transactions that are recorded in the books of accounts may treat as genuine, for which documentary evidence is there. And to find the documentary evidence, vouching should be included in the process of auditing. Second, enables to transactions. Enables to know about the transactions. In the process of vouching, the auditor observes the entries done in books of accounts and the proof of related transaction. So, with the help of vouching, an auditor can easily know about the transactions. Third, help to know relevance of the transactions. By the technique of vouching in audit process, an auditor can check the relevance of transaction, that whether the transactions is related to business or not. If the transactions are not related to the business, then auditor can suggest to remove it or separate it. Fourth, facilitates proper allocation of capital and revenue expenditure. When the accountant make an entry on the basis of documentary evidence, And after recording entries, when it will be checked or examined by the auditor in audit process, then with the help of voucher or in the process of vouching, auditor easily find out or easily differentiate with the help of head mentioned in the voucher that the expenditure is of capital nature or revenue nature. Next, to detect frauds and errors. Under the vouching process, when auditor compare the documentary evidence with entries of transactions in the books of accounts, then he easily find out any type of error or frauds done by the accountant or exist in books of accounts or entries by mistakes by the accountant. Next point, decides authenticity of transaction. Voucher is always passed by the signature authority of the business, and only those transactions may find the place in recorded entries in the books of accounts for which authenticity is there, means the authorized signatory has been passed that particular transaction. So to find out the authenticity of transactions, vouching is very important. Ensure proper accounting. In this point, we can say that the proper head should be debited, the proper head should be credited, or in case of general voucher, the proper head should be debited and credited with the support of supporting documents. And between the comparison of entries exist in the books of accounts and vouchers available in the voucher file, the auditor can easily find out that proper accounting is done by the accountant is there or not. Compliance with law. In case of sales which involves the GST, when auditor see the entries marked on voucher, he easily find out that whether the business following the GST provisions or not. Next, ensure proper disclosure. It is the duty that he have to find out all the information related to the transactions done, and for this auditor may go for the vouching, because with the help of vouching all type of information are marked on the voucher. Last is posting. As an objective or as an importance of vouching, we can discuss about the posting also, because if the proper accounting is there, then posting will also affect in the positive and negative sense. If transactions posted on the basis of voucher is right, then it may be expected that posting will be there right. Some specific consideration should be taken by the auditor, because vouching is the base, vouching is the pillar for auditing work. So let me discuss some special element or consideration that is taken, that should be taken by the auditor while vouching. The first is date of voucher. The auditor have to ensure that date on voucher and date on supporting evidence should be matched. Name of party, whether it is in debit head or in credit head, it should be matched by the available of documentary evidence, that is bill or invoice. Third, tick and audited rubber stamp. It is expected from the auditor that he have to mark a tick or rubber stamped on the vouchers for those vouchers which has been audited by the auditor, so that repetition may not be there for duplication of bills. Next, the auditor have to check very carefully that all the vouchers has been signed or authorized by the authorized signatory of the client firm. Auditor have also be ensured that on debit voucher, if payment has been made exceeding rupees 5,000, then revenue stamp of rupees 1 value should be there. Transactions related to business should be also checked by the auditor carefully, that whether the transaction is related to business actually or not. Only those transactions which relate to the business will find the place in books of accounts of the client firm. Auditor have to be very careful to differentiate between revenue and capital expenditure, because difference between revenue and capital expenditure will affect the profit and loss account and balance sheet also. While vouching, auditor have to check very carefully the amount written in words or in figure. Both should be same. If any difference find by the auditor, then it should be conveyed to the management and the particular accountant also. Account head on voucher. During the vouching, the auditor have to ensure that proper account head will be there in credit line or in debit head line. It is especially recommended to the auditor that no help of the member of client staff or any member of the business or client to be taken for checking receipt. To find out the missing voucher, the auditor is expected to check always the voucher number or voucher control number, by which he can identify that all vouchers are there or any voucher missed or no. Important supportings. All the voucher has to be ensured by the auditor that they will supported by the important documents or important evidence. Cash transaction should be very carefully vouched by the auditor, because in case of cash transactions there are massive chances for fraud and error or misrepresentation. Proper filing. During the vouching, the auditor have to check that all the vouchers and all the supporting bills should be proper filed in the voucher file or in any other file that is related to entries of books of accounts. Signature of receiver. It should be ensured by the auditor during the vouching that voucher should be signed by the payer. Nature of payment. In this point, the auditor should check that which type of payment is there, whether cash or check. In case of cash, the account head will be cash, or in case of check or bank, the account head will be name of the particular bank. During vouching, the auditor should note all the important observation in his audit notebook that will fill the requirement at the time of future reference. Alteration. Any type of alteration in voucher, in figures or in words should not be ignored by the auditor. He have to check very carefully the alteration portion and if necessary then he should communicate it to the client. The auditor is also expected to confirm the voucher control number on and on each and every voucher. Voucher control number is a number of voucher that provide the help to find out missing voucher or duplicate voucher. So an auditor should take special consideration at the time of vouching, because vouching is the initial step of the auditing and all the work is depends on the careful vouching in audit assignment. So vouching is very important, and during the vouching various types of checking are done by the auditor. So if we talk about the vouching, then we have to discuss about the various types of checking in the process of auditing. And the first is routine checking. Routine checking. Whatever may be the size, form and nature of activities and transactions of a business, there are certain records and books of accounts which are common to all type of business operation. So the checking of these common records and books which is carried on by the auditor as a matter of routine is known as routine checking in auditing. Simply routine checking of the examination of books of accounts, of those books of accounts which is prepared by the business concern, and these books of accounts are common for each business. They maintained and audited by the auditor. For the routine checking, the 4 types of functions are involved. The first is examining or checking or ascertaining the casting, subcasting, carry forwards, calculations in the books of original entry. Original entry means primary books of accounts, that is journal, that is sales book, that is purchase book, cash book, etc. Second function is checking of posting in the ledger. Simply to maintain the journal entries, to maintain the ledger with the help of posting. These are the routine work of an business organization. So to check these type of segment of the accounting work, the checking is called as routine checking by auditor. The third function, checking or examining the total and balances of various ledger accounts. Various ledger accounts. It is simply explained that all type of business maintain the journal entries, maintain the ledger accounts, and cast their total and find out the balances. So checking of these type of segment of accounting is known as routine checking in auditing. The last function in the process of routine checking is checking of transfer of balances from the ledger onto the trial balance. Yes, after the balancing of the ledger, all the balances are transferred to the trial balance for preparation of financial statement. So it will also be checked in routine checking. So we can conclude routine checking as the checking of common books of accounts of the business in auditing by auditor. Journal, ledger, trial balance, their casting, their totaling, balancing is the common accounting activities, common accounting functions done by every and each type of business organization. And for checking of this particular area by auditor is called as routine checking. Now what is the advantage of routine checking? if the common books of accounts are checked by the auditor? Okay, first, the books of original entry can be thoroughly checked and the errors and fraud can be easily detected at the primary stage of recording the transaction in books of accounts. Next one is posting. In the routine checking, the posting work is easily checked by the auditor that proper posting has been done or no. Again, the checking of casting and posting done in routine checking is the very basis upon which the final result of audit depends. So, the routine checking help in the checking of final accounts ultimately, because all the final accounts are based on the journal entries and ledger posting in trial balance, because it's a chain. Journal entry, posting, ledger, trial balance, and with the help of trial balance or on the basis of trial balance, financial statement will be prepared. Next advantage is it provides the information regarding error and fraud of a simple nature, and if done with the care and caution, it helps in the verification of the arithmetical accuracy of the entries. By the help of routine checking, normal frauds and error comes out from the auditing process, and if auditor takes some special considerations during the routine checking, then arithmetical accuracy of entries will also be checked by the auditor. Routine checking is very important and is a simple job which can be done easily by a person with an ordinary knowledge of accounts. There is no specific knowledge required by the auditor. Even staff of auditor can easily do the routine checking. It is also important as the routine checking is very simple device of audit work. So there are various advantages of routine checking under the process of auditing. As like everything, because everything has some advantages and also some limitations. So in case of routine checking, some limitations are also there. Routine checking is practically a mechanical process, and so it can cause monotony to those who are entrusted with this task. Only minor cases of fraud can be detected by routine checking. Major items of fraud cannot be brought to light. Means if accountant and a part of management deliberately do some fraud or error by generating fake evidence, then it is not possible to find out these type of frauds or error in the routine check. There appears to be a lot of difficulty in tracing out compensating errors also, as like errors of principle. Routine checking is not always considered important in the audit of a business where self-balancing system is used. So there are various advantages, but some limitations are also with routine check. Now we take the next checking, that is test checking. As name is suggest, big business houses or big businesses have a lot of transactions, so it is very difficult to check all the transactions in detail. In this case, auditor needs to prepare and present report in a short period of time or up to the limit of time. So an auditor check the simple transactions and prepare and present report to the concerned authority, and this type of checking is known as test check. An auditor checks the books of accounts of a particular time or area. If there is no doubt, then it proves that the accounts are true and fair. Otherwise, auditor checks in detail where he finds doubts. But during the test checking, it have to be very carefully ensured by the auditor that no fraud and error are left. So in test checking, auditor didn't check each and every transaction, but he take some transactions as a sample and audit all those test transactions and make their opinion. But in test checking, auditor have to use these techniques that each and every data have to be get a chance to be selected in the sample, because sample represent the rest population of the transaction or group of transactions. But if any error or fraud are left out due to random sampling, auditor will be responsible for such losses. So an auditor applies test check if internal check is effective in the organization. Means test checking is good because the large number of data is there, but auditor have to ensure that he will use the test checking technique only in those business organization which have internal check and internal audit in his internal control system. Because internal control system if exists in a business organization, then external auditor finds some relax for the deep and detailed check. He will check only the process and report generation process of internal control system. If internal control is strong, then test checking may be there. If internal control system is weak or in a part internal control system is weak, then for the particular part the auditor have to go for the detailed checking, and rest area he can use the test checking. Some points are to be taken into consideration while applying test checking by the auditor. First, samples should be selected from the various books of accounts and of different times so that balancing may be there. Second, some transactions related to beginning and ending period of particular year should be checked in detail. Means it's okay that auditor is going with the test checking, but some items, some transactions randomly should be checked by the auditor from the group of beginning transactions of the year. Same in case of ending period. Third, transactions related to cash and stock should be checked in detail. Auditor will always suggest it to avoid test checking in case of cash and stock transactions. Fourth, sample selection is to be made in random basis, not in a planned way, because random sampling is more reliable in comparison to planned way of sampling. Fifth, detailed check of bank reconciliation statement is necessary. Again, auditor is suggested to avoid test checking in case of bank reconciliation statement. So, to consider all these points, an auditor can go with the test checking within an effective manner. Advantages of test checking. There are various advantages why the auditor choose test checking technique during the auditing assignment. Actually, it helps an auditor to complete a big work in less time, because the auditor tests few transactions, not all the transactions. So time will be saved by the auditor. An auditor can complete the work within the stipulated or fixed time, because test checking help to save the time. Third, test check saves labor, time, cost of main auditor. So an auditor can check in detail the specific items rather than checking similar items. Test checking assures about the accuracy and reliability of transactions of some extent, not fully, but up to a maximum level of accuracy and reliability provided by the test checking. Next, accounting staff remain alert and careful because auditor check the transactions of various times in random basis. So it will also provide a moral check on the employees of the client firm. So for all these advantages, the auditor uses test checking in his audit technique. As like advantage, there are some limitations or disadvantages of test checking. Let me discuss. First, there are chances to left errors and frauds because transactions with frauds may be left out from audit. Suppose the fifth transactions having error and fraud, but the sample taken by the auditor didn't include the particular fifth transaction. So in this case, errors and frauds may be there. Second point, results presented by income statement may be incorrect and report presented to the management may not be true due to the use of test check, because there are chances to left over the frauds and error. Third point, test check increase the responsibility of auditor because an auditor should be responsible for the undetected errors and frauds due to use of test check technique. Means after the audit, by using test checking technique, if some fraud and error left over, then auditor will be responsible for this. Fourth point, test check is not suitable method for the audit of small organizations where number of transactions is not in a big number. So in small organizations, test checking should be avoided by the auditor. As like test checking in the auditing process, auditor can also use the technique of surprise check. Let me discuss about surprise check. Auditor and his staff have to visit the client place for carrying out the audit work. Normally the visit is given to understand the accounting system, to evaluate the system of internal control existing in client business, stock taking etc. It is well accepted that the audit constitute a moral check on the employees of the client and thus have a deterrent effect. But at the same time, if the auditor or his staff visit at regular intervals, the client or his staff may get time to be well prepared in advance for the audit queries. This may decrease the deterrent effect. So there is a need of element of surprise. An element of surprise can importantly improve the effectiveness of an audit, and therefore wherever practicable, an element of surprise should be incorporated into the audit program by auditor to do the audit assignment. In case of surprise check, the auditor and his staff, without any prior information, comes to the client business and do the audit work. And it provides a significant improvement on the effectiveness of the audit because the client and his staff is not prepared in advance for the queries raised by the auditor, and it provides a effective results for the audit work. For making effective audit work by using surprise check, ICAI also recommend for surprise check. ICAI recommends surprise check as a desirable part of each audit plan prepared by the auditor, specifically in case of cash and investment portion. Specifically for cash and investment portion. Even for stores and stock also. because these are the gray area, these are the important areas for a business concern: cash, investment, stock, and stores. And surprise check always be taken at the time of auditing of books of primary entry, that is journal, that is sales book, that is purchase book, cash book, bills book, etc. ICI also recommend the frequency of surprise check may be determined by the auditor in the circumstances of each audit, but should normally be at least once in the course of an audit. There is no standard, there is no prescribed frequency of surprise check, but it is expected by an auditor that he have to go with the surprise check at least one time in his audit work. Recommended by the ICI that results of surprise check should be communicated to the management. If they find weakness in the internal control system or the existence of fraud and error. Again, ICI recommends that only communication of surprise check result is not necessary. Even the adequate action is taken by the management on the matters communicated by the auditor to the management is satisfying the auditor. And ICI also recommends in a final stage that the result of surprise check, if very much important, then it should be included in the report, audit report by the auditor. If the deviation or the matter is material and affect the true and fair view of the books of accounts. So, surprise check is very important element of auditing process, is very important technique of auditor in audit work. It provides more and much effectiveness for the audit assignment, as like surprise, routine checking. The next term is audit in depth. Let me discuss the term audit in depth. Audit in depth means an examination of a few selected transactions from the beginning to the end through the entire flow of the transaction. Entire flow of the transaction means starting from the journal entry towards the preparation of financial statement. So, auditing in depth refers to an examination of a few selected transactions from the beginning to the end through the entire flow of transactions. Audit in depth means checking a transactions extensively from its origin to end. It is used in the investigation exercise, whereby the objective is to through examination of transactions of record. Audit in depth means intensive checking of few items throughout its origin to end. Means if auditor thinks so that he can choose few selected transactions from the books of accounts of the client business and do its examination from its origin. Origin means when it has been recorded in the primary books of accounts, and by the following of step: posting, ledger, trial balance, and up to its end when they shows in the financial statement with the help of profit and loss account and balance sheet also. So, audit in depth is a detailed checking of transaction from its origin to end, but only few selected transactions, not for the total number of transactions. It provides the deep results regarding the true and fair view of the business. Again, as like test checking, routine checking, audit in depth. A new term is overall checking. What is this? Let me discuss. A detailed and comprehensive examination of accounts is known as overall checking. Detailed and comprehensive examination of accounts. Overall checking includes all those techniques and processes that used by the auditor to detect the errors and frauds which are not detected routine checking. For example, it is not possible to find out whether the entire amount due from debtors has been received or not. Likewise, it is difficult to know that those liabilities for which provisions have been made will actually paid or not. So, to analyze the true and fair view or analyze the actualness of the books of accounts or transactions recorded in the books of accounts, overall checking is used by the auditor. It provides a detailed view, and this is a technique which reveals those frauds and error that cannot be found easily in the normal checking, normal auditing.